So over the past 12 months, rising inflation has crashed global financial markets. You see, the stock market is a leading indicator as to what is going on in the economy. This means that when the market is going up, people think that the economy will perform well over the coming months and years. But when the market is going down, it means that people are preparing for the worst. They think the economy is going to get worse and they're worried moving forward. During the last year, we've seen gas prices, food prices, energy costs, and every single aspect of the economy get more expensive, causing markets to take a big hit. But as of July 2022, we've actually started to see inflation come back down slightly. This should be great news. It should mean that inflation has peaked, things are going to get better, that the Federal Reserve is going to slow down their rate increases, and the stock market is going to go back up, start to rally, and enter another bull market. But it's not exactly this. You see, inflation peaked at 9.1% in June 2022. Yes, based on current data, that is true. It came back down in July to 8.5%, but things are far from over. Recently, Jerome Powell said at the Jackson Hole Symposium to expect a growth recession, which describes a period of slow economic growth and higher unemployment. He does not expect a soft landing in the economy and says that there will be some pain for Americans through layoffs, weaker pay growth, and higher borrowing costs. He says things are not going to get better immediately. They're going to get worse before they get better. So to me, this doesn't really sound like things are going to be great for the economy over the next year to 2 years, and many reports have come out recently saying the exact same thing. This is going to lead to ultimately a lower yielding market. But there is some good news, and things could flip very soon, depending on a couple of key reports that are coming out in the next 30 days that all investors need to be aware of, because they could change the entire trajectory of the economy and of global financial markets very quickly. It could happen within 48 hours of these reports coming out. So first thing I want to go over is data that has already come out recently that is very important to look at. First is going to be with payrolls. So unemployment rate and payrolls in the U.S. New report came out from the Bureau of Labor Statistics for the month of August. And this report shows that payrolls rose 315,000 in August 2022, meaning that companies are continuing to hire more employees despite inflation, despite interest rates going up, despite everything going on in the economy, where we're still seeing companies hire more and more people. But the thing is that we've actually seen the unemployment rate climb to 3.7% because more people have started entering the workforce. A lot of people left after the pandemic. A lot of people started working from home or took time off and never came back. But now people are coming back because a lot of that stimulus has started to wear off and people need to return to work. So we saw new payrolls increase 315,000 jobs for the month of August 2022, but they still seeing unemployment rise, and we did see it slow down from the month before, because in July we saw 526,000 jobs added. This basically means that, look, we're still seeing companies looking to hire. It's not that things are slowing down completely, but they're starting to turn around, and that's a good sign. That's showing that inflation and what Jerome Powell and the Federal Reserve has been doing is working, because you don't want to continue seeing jobs increasing, more and more people getting hired month after month after month, because that would be a disconnect from what is actually going on. So this is a good thing for the economy, that we're seeing unemployment sort of track and follow what is going on with the Federal Reserve and with interest rates. Next thing that that's coming out is going to be a new report on CPI data. This report comes out for the month of August, and it's going to come out on September 13th, 2022. This is important because this shows us exactly what is going on in the economy. Is inflation continuing to drop, which we want to see, or has it started to rise again? Personally, when we start looking at the data, it looks pretty likely that we're going to see inflation continue to fall. So from July 2021 to July 2022, we saw inflation at 8.5%. This came down from the month before when it was at 9.1%. So 9.1% in June, down to 8.5% in July. This was a good sign. But moving forward on September 13th, we're going to see August data and see, did we see another drop in of inflation, or is what the Federal Reserve doing not enough? And that would be a very, very bad sign. If we saw inflation rise in the month of August, that would mean the Federal Reserve is going to crack down. They're going to raise interest rates at an even faster rate than people are already expecting, which is right now 75 basis points. So we need to see this report show a drop for inflation. The good news is that we have seen the Cleveland Federal Reserve come out and say that they are forecasting it's going to drop to 8.24% in August and then down to 8.22% in September. So based on their forecasting, it looks good. And when you're looking at prices, if you're looking at gas prices, you're looking at housing, you're seeing a lot of these things start to come down. So if you're just looking around, observing what's going around yourself, you'll see gas is at lows that I haven't seen in a while. I saw gas prices the other day, less than $3 per gallon for regular. And also when you're looking at housing, you're seeing that new mortgage applications are dropping significantly and prices are starting to come back down. So that is a good sign. So when we're looking at the data, keep an eye out for September 13th. That is going to be a very important date for the overall economy. And the last thing that we need to keep an eye out for is going to be what is going on with the next Federal Reserve meeting, which is taking place later in September, on September 20th and September 21st. So Jerome Powell, the Federal Reserve, is going to be talking about what is going on in the economy. And this is going to be officially where they say, are we going to increase rates by 75 basis points again? Are we going to do 50 basis points? Are we going to even do 100 basis points? The good news is as long as we see that data that comes out on September 13th, we see it continue to fall. We see that inflation is continuing to drop. We shouldn't see any issues, and we should continue to see the markets start to react positively to this news. If any of these numbers, if we see inflation increase in the month of August, that would be a bad sign. If Jerome Powell and the Federal Reserve come out in the end of September, September 20th, September 21st, they increase rates at an even faster rate, that's going to be bad for the markets. But as long as we see inflation continue to drop and we see the Federal Reserve stick to their plan, which they have said really is going to be 75 basis points this month and then drop it off and gradually decrease the rate of their increases over the coming months and over the next year to 2 years. That would all be good for the market. So keep an eye out on this if you're an investor. But right now, things are looking more optimistic despite the economy going to be struggling, it looks like, for the next couple of months in terms of unemployment continuing to rise. You got to remember, markets are leading indicators for what is going on in the economy, meaning that they are saying, is what's going to happen in 6, 12 months, 18 months? Is things going to get better then, or are we going to see things worse then for the economy? And if things are getting better 6, 12, 18 months from now, well, then we're going to continue to see the market start to rally because it is a leading indicator for what is going on. So that's what's going on in the current markets. Make sure to keep an eye on that if you're an investor, and I'll see you guys in the next episode. See ya.